Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the corporate jargon so you don't have to. Today we're diving into a report from DTE Energy Co that hints at some future investor meetings and what that might mean for their public face. It is a bit of a peek behind the curtain. So let's get this decoded before we get too deep. If you love getting insider insights from these official filings, do us a favor and hit that subscribe button. And for a more direct connection and to join our growing community of corporate sleuths, our Discord is linked in the description below. So what is going on here, DTE Energy? A pretty big player in the energy sector is filing a current report, specifically a Form 8. Think of this as a company's way of quickly telling the public about a significant event that shareholders should know about. In this case, it's primarily about an upcoming investor meeting and some related disclosures. The report itself is dated November 07, 2025. This is the date of the earliest event they're reporting, which seems to be tied to making some information available. We have two main registrants here, DTE Energy Company and its subsidiary DTE Electric Company. They both share a principal executive office in Detroit, Michigan. Now, what do these companies actually do, and what are they offering out there in the world of finance? The filing lists several classes of securities. Most importantly, for many investors, they have common stock trading on the New York Stock Exchange under the ticker symbol DTE. This is what most people think of when they hear about a company's stock. But they also have a variety of what are called junior subordinated debentures. These are essentially loans the company takes out, but they're a bit riskier for the lenders compared to other types of debt because they get paid back later if something goes wrong. They have different due dates and interest rates. Like the 2017 Series E debentures due way out in 2077, paying 5.25%, and then Therese, the newer 2025 Series H debentures, paying a higher 6.25% and due in 2085. These debt instruments show how the company raises money from investors aside from just selling stock, and these are significant amounts of money over very long periods. The meat of this particular filing is under item 7.01, which is about Regulation FD disclosure. This rule is all about making sure that when a company releases important information, it's shared with everyone at the same time, not just a select few. Here is the main event. DTE Energy is planning to meet with investors between the 9th of November and the 11th of November, 2025. This is pretty standard for publicly traded companies. They'll hold calls and meetings to update investors, analysts, and the financial community about their performance and future plans. They are also furnishing a slide presentation that's attached as an exhibit. This presentation is likely what they'll use during these investor meetings. And importantly, the public will be able to see this presentation on DTE Energy's website a couple of days before the meetings, starting the 7th of November 2025. This is good transparency. Now, what are they going to be talking about? The filing says that in their business presentation and in this very report, they will be discussing their operating earnings guidance for 2025 and even looking ahead to 2026. This is forward-looking information, essentially their best guess for how profitable they expect to be. Here is a crucial point and something you always need to watch out for with earnings guidance. They're telling us that certain things that affect their official reported earnings won't be included in this operating earnings number. They are not providing a direct bridge or reconciliation between these operating earnings and the reported earnings. Why? Because they say it's impossible to accurately predict things like one-time costs, adjustments for market swings on investments, or profits and losses from selling parts of the business. These kinds of irregular items can pop up and disappear, making reported profits swing around a lot. This is where companies can sometimes present a rosier picture by just showing the steady parts of their business instead of the whole story. There is also a bit of necessary legalese here. They're stating that the information in this report, including the presentation, isn't considered officially filed in the same way a full financial report would be. This is a common disclaimer to limit their liability for forward-looking statements that might turn out to be wrong or incomplete. It is a standard way to protect themselves while still sharing information. We then move to item 9.01, which covers financial statements and exhibits. This is where they formally list what's attached to the report. Here again, they list exhibit 99.1 as the slide presentation for their investor meetings. This is the core document that will contain the detailed narrative and financial outlook they plan to share. And then Tyrese, the cover page interactive data file. This is part of the modern way companies file their reports using something called inline XBRL. It makes the data more machine readable and easier for analysts and investors to process automatically, which is a good thing for transparency and analysis. Finally, we get to the forward-looking statements section. This is a lengthy legal disclaimer that essentially says, we're talking about the future and the future is uncertain, so don't sue us if things don't go exactly as we predict. They're reminding everyone that their actual results could be very different from what they're projecting due to various risks and uncertainties. And they're not necessarily going to update these forecasts if new information comes out. It's standard practice, but it always underscores the speculative nature of future financial predictions. Now, let's look at what this all means. DTE Energy is setting the stage for its investor meetings by releasing its guidance. The fact that they are highlighting the exclusion of certain items from their operating earnings is a key signal. It means investors need to be extra diligent. When DTE presents its future earnings targets, they'll be painting a picture of the underlying ongoing business operation. But the reality of their total reported profits could be different because of unpredictable things happening in the background. Essentially, they are asking investors to trust their forecast for the core business, but to be aware that other factors could influence the final numbers. This approach isn't unusual, but it puts more onus on the investor to understand the potential impact of those excluded items. We don't have the actual slide presentation here, so we can't see the specific numbers they're giving for 2025 and 2026, or a detailed breakdown of what might be excluded. However, the mention of non-recurring items, mark-to-market adjustments, and discontinued operations are important clues. Recurring items could be things like a large lawsuit settlement or a major restructuring cost. Mark-to-market adjustments often relate to how financial assets and liabilities are valued based on current market prices, which can fluctuate. Discontinued operations mean they might be selling off or have already sold a particular business segment. The really important part for us as investors is to try and get our hands on that Exhibit 99.1, the slide presentation, as soon as it is available. That is where the real story will be. We'll want to see what DTE sees as its core predictable business and then try to anticipate what those excluded items might do to the bottom line. Are they expecting a big sale that will boost profits temporarily, or are they trying to downplay potential losses from an underperforming segment? Looking at their various debentures, the variety in interest rates and maturity dates suggests a established company that's using different financial instruments to manage its capital structure over the long term. The fact they are issuing new debt, like the 6.25% debentures due in 2085, indicates they are likely funding growth, operational upgrades, or refinancing older debt. In essence, DTE is giving a heads up about what they're going to discuss with investors. It's proactive but requires a keen eye from anyone listening to their presentations. The real numbers, the risks, and the opportunities will be in the details they share about those upcoming investor meetings. Alright, so what is my take on all this? DTE Energy is operating like a seasoned public company, carefully managing its communications. They are signaling their future performance expectations, which is a critical part of investor relations. The key here is the distinction between operating earnings and reported earnings. This is a common tactic, and while not necessarily nefarious, it demands scrutiny. Investors should be looking for transparency on how these excluded items might impact actual profitability. The strength of DTE lies in its likely stable core business operations, as suggested by the focus on operating earnings guidance. However, the actual future financial health will depend heavily on how these less predictable excluded items play out. Their considerable debt offerings indicate a company actively engaging in financial markets to fund its operations and growth, which is a sign of a mature business but also brings the inherent risks associated with leverage. The opportunity lies in understanding the strategic implications of any business segments being discontinued or adjusted, and the potential impact of market fluctuations on their financial assets. For now, it's a qualified outlook dependent on the details yet to be fully revealed in their investor presentation. That's our decoder on DTE Energy's latest filing. What are your thoughts on their approach to earnings guidance? Do you think it's transparent enough? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and remember to subscribe for more in-depth corporate analyses. And don't forget to join our community on Discord. That link is in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.